All right, well, let's move on to our next objective, which talks about transactions. All right. We are now going to learn how to record transactions within the context of the accounting equation. What are transactions? Transactions are events that occur that affect the financial position of our company. Remember the accounting equation. Assets equal liabilities plus stockholders' equity. What we're going to learn now is how to take each transaction that occurs and record it within that accounting equation, keeping in mind that the accounting equation always must balance. What's on the left, assets, must always equal what's on the right, liabilities plus stockholders' equity. The most important thing we're doing in this part of the chapter is learning to ask ourselves a question that's going to be really important to us in Chapter 2. That question is, what do I have more of, or what do I have less of? What do I have more of, or what do I have less of? Our biggest concern right now. If I have more of something, we have a form we're going to fill in. It's got columns on it. But if we have more of something, we're going to add. If we have less of something, that means that we need to subtract. So more of something we're going to add, less of something we're going to subtract. There are basically three possibilities for each transaction. Sometimes we might find that we have more of two things. In other words, we'll be adding to two different things. Sometimes we have less of two things, which means we'll be subtracting from two different things. And sometimes we'll have more of one and less of another, which means we will be adding to one thing and subtracting from another. Any combination is okay as long as the accounting equation balances. In other words, as long as what's on the left, assets, equals what's on the right, liabilities plus stockholders' equity. One area that gets a little bit tricky here is how we handle certain items within stockholders' equity. We're going to consider stockholders' equity to be a big umbrella that includes some items that don't actually show in the stockholders' equity section of the balance sheet. That is revenues, expenses, and dividends. Revenues, when we earn revenue, that makes the net worth or the equity of my business go up. Something's going up, it's increasing, so we're going to be adding. Dividends and expenses both make my stockholders' equity go down. So when we're showing these in our forms with the columns, we're then going to have to subtract them. All right, do you see we have this form with columns on it? I'm going to just call it our columnar form. Let me tell you before we even start that this is simply a tool to help us learn how to think in a certain manner. We are throwing this form out the window at the end of this chapter. So don't get attached to it, okay? This is simply helping us learn to think in a certain manner. Do you see the big dividing line right there? On the left of that line, I have assets. I have three columns for assets, for cash, accounts receivable, and for equipment. On the right side, I have liabilities and my equity. Under liabilities, do you see I simply have accounts payable? Now, under stockholders' equity, a minute ago, when we talked about it on the balance sheet, there were only two things that would show under stockholders' equity. What were they? Retained earnings, good, and capital stock. Those are the only two items which actually show on the balance sheet as part of my stockholders' equity. But you're going to see here, we have four more things listed, don't we? We have dividends, we have fees earned. That's what we're going to call our revenue. When we earn revenue, we're going to say we have fees earned, and then we have two expenses. What did we say affected the net worth of our business? Well, earning net income or having a net loss was the main thing that affected our equity. Well, what do we mean by net income or net loss? It's the difference between my revenues and my expenses. So indirectly, my revenues and expenses do affect my stockholders' equity. Dividends does what? It makes my retained earnings go down, so it also indirectly is affecting my equity. If I had to write my own accounting principles textbook, I'm not sure I would lay it out like this. But I just want you to see, think of stockholders' equity as a big umbrella that includes retained earnings, capital stock, and then these four other accounts which indirectly affect it, my dividends, my fees earned, and then my expenses. I'll explain that more when we hit those transactions. My beginning balance, notice I have $2,000 cash. I have capital stock of $1,300 and retained earnings of $700. Let's see where we're at. All right, now we're going to analyze transactions. Jerry gives the business $9,000 cash, and the business gives Jerry shares of stock. We are the business, that's important. What do I have more of now? What did he give me? Cash. I have more cash. Okay, now you might have thought of something different, and that's okay. I just happen to know that's what I have up there first. Under the cash column, I want you to put plus 9,000. The business now has $9,000 more cash that it did not have previously. What's the other thing that the business has more of? Capital stock. Shares of stock outstanding. I have more shares of stock outstanding, so I have more capital stock. So I want you in the capital stock column to put plus 9,000. So the business has more cash and the business has more capital stock. Does my accounting equation balance right now? I have plus 9,000 on the left and plus 9,000 on the right. Am I okay? Good. The next one, I buy a camera and I pay $2,000 cash for it. What do I have less of? Less cash. Let's put minus 2,000 under the cash column. What do I have more of? Equipment. Let's put plus 2,000 under the equipment column. So notice on the left side of that equation, I have minus 2,000 and plus 2,000. In other words, A equals 0, right? 0 on the left, 0 on the right. Do I still balance? I do. The next one, I create some ads for Elaine. I am an advertising company. Okay? I do some work for Elaine and she pays me in cash right away. What do I have more of? I have more cash. Okay, let's put plus 600 under cash. What else do I have more of?
Fees earned.
Fees earned. Why is that? I did work. Anytime I do work, I have more fees earned. And that is my revenue. I have more cash and I have more revenues. And we call my revenues fees earned. Now the next one, I create some ads for Kramer. He promises to pay me soon. Poor Kramer. I don't know if I trust him for that, but we're going to assume he's going to come through. So I did some work. Kramer hasn't paid me. Kramer owes me. What do I have more of? Accounts receivable. Good. I didn't get cash this time. I have an accounts receivable. What else do I have more of? Fees earned. I did more work. Anytime I perform a service, I have more fees earned. Whether or not I get paid right away doesn't matter. When I do the work, I earn the revenue. We're happiest if we get paid right away. But in terms of recording revenue, when we do the work, we record the revenue. Has everything balanced so far? Yeah. Notice in the first entry, we had more of two things, $9,000 more on the left and on the right, right? On the second one, we had less 2,000 plus 2,000 on the same side, so that zeroes out. Okay. On the last two, what did I have? I had a plus on both the left side and the right side. Am I balancing? Yeah. Let me mention also that when you go to do homework, your textbook would have you, after each transaction, recalculate every account subtotal. So they make one entry, they're going to recalculate all the subtotals. They're going to make another entry, they're going to recalculate all the subtotals. I don't care if you do that or not. If you want to, that's fine. To me, it takes a lot of time. I probably wouldn't bother myself. But if you want to, that's perfectly fine. Because again, what did I tell you about this form? You're never going to see it after we leave this chapter. Okay? George, my employee, works for me. I pay him $800 cash. What do I have less of? Less cash. Let's put minus 800 on the cash. Now, really, I have more of something else. Given those titles up there, what do you think I have more of? Salary expense. However, what effect do expenses have on my stockholders' equity? They make it go down. So this is what I think is a little bit odd. Okay, if we have more of an expense or more of a dividend, we're going to have to put a minus sign in front of it. Why? Because we're showing them under the umbrella of stockholders' equity, and they make my equity go down. So really, I have more salary expense, but expenses make my equity go down. I'm going to put a minus sign in front of it. All right, next, let's buy a computer, and I promise to pay for it later on. Buy a computer, promise to pay for it later on. What do I have more on? I heard two things, but let's do the equipment first. Okay, we'll put plus 3,000 under the equipment. What else do I have more of? Accounts payable. Good. Now, if you thought of the accounts payable first, that's fine. You're welcome to fill that part in first. I just know what I happen to have up here on the screen. So I have more equipment. I have more debt, more accounts payable. All right, next, let's pay my electric bill in. I've already used up this electricity. I'm not paying in advance. I've used it up. And I pay it. What do I have less of? Cash. That's cash. Now, really, I have more of something else. What is it? Utility expense. But expenses do what to my stockholders' equity? They make it go down. So I got to put a minus sign in front of it. My computer. Remember I bought the computer for $3,000 and I promised to pay for it later on? I pay $1,500 towards the amount that I owe. Pay them half of what I owe. What do I have less of?
Cash.
Less cash. But minus $1,500 on cash. What else do I have less of? I have less accounts payable. My debt has gone down. Before I owed them $3,000. Now once I make this payment, I don't owe them $3,000 anymore, do I? I need to make my debt go down. Sometimes I get students who think I have more or less computer. No, when did I record the computer? Back when I bought the computer. What I just did was make a payment toward my debt. I didn't do anything that actually affected the computer then. All right, Kramer. Remember we did some work for Kramer and he was going to pay us later on? He now pays us $500 of the amount that he owes us. What do I have more of? Cash. Let's put plus 500 under cash. What do I have less of? Accounts receivable. Kramer owed me, what, $1,900 to begin with? Does he still owe me $1,900? No. His accounts receivable has now gone down. Now, sometimes I get students here who want to say we have more fees earned. No, we didn't do more work for Kramer now. Okay? When did we record the fees earned for Kramer? Back when we did the work. We didn't do more work for him. He simply is giving us an asset of cash, and we are now reducing the asset we have of accounts receivable. Let's see how well we're balancing. How about on the first entry? We had less of two things, right? That second entry, we had more of two things. The third and the fourth, we had less of two things. And then that last entry, we had more of one and less of another. Do we balance? Yes. Any combination is okay as long as the accounting equation balances. Let me tell you the most common thing students do wrong with homework here. They put down one part to an entry. Every entry has at least two parts. Every one we've done so far has had two parts. If you do one part, that's not going to be sufficient. Okay? You've got to have at least two parts to each entry. I also get some students who think that every entry affects cash. No, lots of entries affect cash, but not all of them. Not all. All right, let's do another example. We pay dividends, $200 in dividends. What do I have less of? Cash. Minus $200 in the cash. Now, really, I have more of something else. What is it? Really have more dividends. However, dividends do what to my equity? They make it go down. So we've got to put a minus sign in front of that. Finally, we get in our phone bill. We're not paying it in advance. We've used up this service already. Okay? Don't pay it yet. We're going to pay it later on. Go pay it later on. What do I have more of? Accounts payable. I owe more money. I have more debt. All right, let's see. Really, I have more of something else. What is it? Utilities expense. But utility expense has what effect on my equity? Makes it go down. So we had to put a minus sign in front of that. So notice here we have less of two items in the first one. We have more of one and less of one in the next one. Do we balance? Yes. The next step I want you to do is to pull out your calculator for a minute. And I want you to make sure that you add up to the totals that I have, and that you didn't make a mistake in recording something in the wrong column, perhaps. Don't forget to add in the beginning balances. Okay, like the $2,000 cash you had to begin with. And you should come up with $6,700 and $1,400 and $5,000, then $1,800, $10,300, $700, minus $200, $2,500, minus $1,200, and minus $800. Now, if we have recorded every transaction in such a way that what's on the left side of the equation equals what's on the right side of the equation, then wouldn't it make sense that my totals ought to also balance that way? And if you were to add up your three totals on the left, you'll see that they add up to $13,100. And if you were to add up your seven totals on the right, you would see that they also add up to $13,100. All right, so your two figures, your totals, what's on the left, what's on the right, ought to equal. If they don't equal, you've made just a mistake. You know, maybe you added something you should have subtracted, put something in a wrong column, perhaps. But that's a good sign. If it didn't balance at this point, you know something's wrong. All right, the next thing I want to do, though, is to prepare our financial statements. Prepare our financial statements. The first one we're going to do is the income statement. And on the next page then, now what you might want to do is if you don't have things stapled together but you have your pages loose, you might want to take this page with the columns on it and pull it out of your notebook and put it to the side where you can look at it then. Because we're going to use that data now to prepare our financial statements. All right, income statement first. I've already filled in the heading for you. All right. What's the formula for the income statement? We start off with what? Revenues. All right, so we're going to write the word revenues. What did we call our revenues? Fees earned. Fees earned are our revenues. Now, I'm assuming in this case we just have one revenue. All I need is the total at the bottom. Okay, the total at the bottom. Do you see that was $2,500? I'm going to put the amount in the far right column because I just have one revenue, so it kind of doesn't make sense to list the total separately. All right, what comes after revenues on the income statement? Expenses. What sort of expenses did we have? We had utilities and salaries. Good. We had two expenses. We had utilities and salaries. Let's put the amount in the inside column right there. Don't put it on the far right. Put it in more the middle column. All right, so we have two expenses. We have utilities and we have salaries for a total of $2,000. Now, do you see I put the 1,200 and the 800 right beneath each other in that middle column? Why is that? So I could then take the 2,000 and put it over there directly beneath the 2,500. How did we do this period? I think we did great. Why do I think we did great? Because we have more revenues than we do expenses. Now, if those numbers aren't big enough, you can add 6 zeros to the end of them. That would work, okay? Same idea. When you have more revenues than expenses, that's a good thing, all right? You have a net income. So that's the last thing we'll write on this statement is the words net income. And it's $500. It's the difference between my $2,500 in revenues and my $2,000 in expenses. All right, let's move on next and do my retained earnings statement. My retained earnings statement. Now, I gave you a really dumb sentence to help you remember what goes on the retained earnings statement. Anybody remember that sentence? Big noses drip in excess. Okay, big noses drip in excess. All right, retained earnings statement. All right, I filled in the heading. Notice the date line is exactly the same as it was for the income statement. Exactly the same. This, again, is for the month ended May 31st. Big noses drip in excess. B stands for what? Beginning retained earnings. We're going to write it a little prettier than that, though. What are we going to write? Retained earnings, comma, May 1st. Good, because that would be the beginning date for this period. Let's put the amount in the far right column. So my retained earnings on the very first day of May are $700. Big noses. N stands for what? Net income or net loss. Which did we have? Income. How much? 500. Where do we get that from? The income statement. Do you see why we had to do the income statement first? Okay, so my net income is $500. Now let's put that over there in the column to the left, okay? Not in the far right, but in that more middle column right there. Big noses drip. D stands for what? Dividends. We're going to subtract my dividends. Now again, I just need the total down at the very bottom. Oh, let me back up. I didn't say that 700. Does everybody see where that beginning 700 comes from for the retained earnings? On the chart with the columns, look at the very top of the column. How much retained earnings did we have to start? 700. That's where I got that figure from. Dividends, from that table, very bottom. Again, we just need the total. Big noses drip in. Okay, hopefully we have what? An increase in retained earnings, but let's see. My net income was 500, my dividends were 200. All right, increase or decrease in retained earnings? Increase. Why? Because the net income is 500 is bigger than my dividends of 200. I have an increase in retained earnings then of $300. So my retained earnings to start the month were $700 and they increased by $300. All right, well, how much would my retained earnings be on the last day of this month then? $1,000. Okay, that'd be my ending retained earnings. But again, we're going to write it a little prettier. Instead of saying ending retained earnings, what are we going to say? Retained earnings, comma, May 31st. So we have explained why my retained earnings changed from $700 at the beginning of the month now to $1,000. I want you to notice one thing, though. If you were to go back and look at the form with all the columns on it, if you look at your column that says retained earnings there, what do you show for ending retained earnings on that form with the columns? 700. What do we show here? 1,000. This is the number we have to take and put on my balance sheet. The 700 that's still showing on your form with the columns really represents what? Your beginning, didn't it? Because did we make any entries to affect retained earnings? No. All right. So notice this says 1,000, which is different from the chart, from the sheet with all the columns in it. That's okay. All right, let's go on and do the balance sheet then. Let's go on and prepare our balance sheet. I filled in the date line for you. It is simply May 31st. May 31st. What's the formula for the balance sheet? We start off with what? Assets, right? And the first asset we're going to list in will be cash. We want the ending balance, not the transactions, just the ending balance. All right, what other assets do we have? Accounts receivable, and what else? Equipment. Good. Far right. Far right. for a total then of my 13,100. And honestly, sometimes I get students who want to put those 3 numbers in the column to the left. That's okay with me. That's okay. Either place would really be okay, as long as the total needs to go over there in the far right. So 3 assets. Cash comes first. Other than that, right now, I'm not concerned about what order you put the rest of them in. That's my asset side. All right, after assets, I'm going to be showing what? My liabilities and stockholders' equity, right? Which of those first? Well, we'll put the liabilities first. What sort of liabilities do we have? Accounts payable. Now, I actually put a total after that. That's kind of silly, isn't it? Did I need to? No. Why did I? Well, I don't know about in your life, but in my life, I normally seem to have more than one debt. So I just was going to be prepared. Okay. Did I really have to? No. I could have simply put accounts payable and left the total to the right, and that would have been okay. Stockholders' equity. 2 items that show up for stockholders' equity. What's one? Capital stock. We're going to pull the ending balance from our table with all the columns, 10,300. And what's the other item that shows on my balance sheet in stockholders' equity? Retained earnings. And what's important is, where do we pull that number from? The statement of retained earnings we just did. Okay. So we pull the 1,000. If you went and pulled the 700 from that table with the columns, guess what? We wouldn't balance. So my total stockholders' equity is going to be the 10,300 plus the 1,000, a total of 11,300. If we add that to my 1,800 to my liabilities, we're going to see that my total liabilities and stockholders' equity adds up to $13,100, which, like magic, equals the amount of my total assets. If you were to find that they did not balance, most likely you pulled the wrong number for retained earnings. That's the most common mistake that I see. On the next page, if you were to look, I just want you to see the way we did ours. We put assets on the top, liabilities and equity down below. Do you see on the next page there's another way we could do it, and that is put assets on the left, liabilities and equity on the right? I don't care which way you do it. It doesn't matter to me at all. As we're going to add to the balance sheet, we'll probably do more of the top and bottom approach, but you can do it either way. Matter of fact, on the test, I'll give you both forms, and you can pick whichever way you want to do it then.